Because in 2017, that's when I really started following crypto religiously. A lot of friends were in it, and some high-profile people that were in it. And I got infatuated with it. Then in 2018, mid-2018, which is a good time to start a crypto newsletter. That's what we did at Curzio Research. Crypto Intelligence we launched when the market really crashed. And I started to analyze hundreds of cryptos. So remember, I'm a research analyst, right? So I really dig deep. You see my videos if you're a subscriber, through all my newsletters and products. I'm actually doing the research. I really dig into it. That's what I love. I'm passionate about. And after getting through the first 100, I realized a trend. That over 90% of these tokens were complete horseshit. They were frauds. I couldn't find any information out on them. There's no financials, no insider ownership, no updated cap table, who's selling, who's not selling. Most of these utility tokens, they're called, not security tokens, utility tokens, they have zero utilities. So you're not getting an equity stake in them if you bought them. So the value of these things are only tied to the utility feature, or how you can use those tokens to purchase things where you might gain access to certain things, whatever. That's the utility function. For example, if you look at the Binance token, you could use that token to lower your trading fees on the platform. You could book trips. There's tons of uses. So there's value to that token. You're not getting equity stake, but there is value to that token. It's a utility. And think Dave & Buster's. If you have one of those cards, that card is very, very valuable. You put money on it, you play video games. You can use that at all of Dave & Buster's. But if Dave & Buster's closed, you could have $1 million on that card and it's worthless. It's like a utility. You can't cash it back in and say, hey, it's 100. No, too bad. But most of these tokens, they have no utility features. In other words, 90% of these things, again, we're talking utility tokens, should be worthless, where they raise lots of money through ICOs, 17, 16, even 17, 18. The management teams probably took more than 50% of that cash to buy new cars or homes without having to disclose anything. You don't know where that money went. Nothing. A lot of this stuff is raised overseas. And very few people back then when I started digging in, even today, I mean, you don't realize that most of these utility tokens are absolutely worthless. I know, I talked to them. They're buying Dogecoin, all this stuff. I'm like, man, they have no features. They're trying to create features. Companies out there saying you should use Dogecoin. Maybe to buy a few products here and there, but really, it was created as a joke. We all know it. Now, I love the idea of crypto. And again, thought it was an amazing industry along with blockchain technology. I think a lot of people, a lot of companies agree, blockchain. But what we need here is more regulation. I'm not talking about regulating the whole entire thing where it's crazy, but it needs to be regulated to where investors know their money is safe. It's not going to be stolen without any consequences. If you have something overseas and you have $100,000 in Bitcoin, it gets stolen, don't call the SEC. They're not doing anything for you. There's no regulatory authority that can do anything for you. Like, sorry. Binance got hacked. Forgot how many millions of dollars, and they paid it back right away. Real company. There is some great companies in this space, but very, very few. So I looked at this industry and said, okay, it has to get regulated. And that's when I started to research security tokens. So a way like businesses, Curzio Research, small growth companies, it's a way for them to raise money without having to go to investment banks where they want board seats and they want special price discounts and warrants that they could sell immediately. Again, they're not in for the long term. You could see what SPACs are all about. Let's look at Chamath. He's out of these things right away. This is the greatest thing ever. Virgin Galactic is the greatest thing. He's out of it. A couple years later, made his money. Did what he had to do to promote it, right? That's normal. That's par for the course. I mean, you can be pissed at the guy. That's par for the course with venture capital. They're not in long term. Even Peter Thiel winded up selling Facebook. Man, if I had to guess at the price, I would say, what is it? $900 billion valuation. He probably sold it around a $350 billion valuation. Sold it really quick. Got out of it. Made his money over $2 billion. Good for him. He was in very, very, very early, which is kind of like security tokens. Gives you an opportunity to get into these things early. But the point is, you don't have to go to investment banks, and we can eventually bring our company public, which Curzio Research is public right now, just 1 year later. 1 year later. Now, this time frame is critical for you to understand. And trust me, guys, even if you're not security tokens, you should understand this industry because it could give you life-changing gains. It gives you an opportunity to invest like a venture capitalist in early-stage growth companies, not after they IPO'd at $20 billion, $10 billion, $80 billion valuations or even $100 billion valuation like Coinbase did, which has now come down, what, 40%, 50% from its highs? So that 1 year time frame, it's critical. Since if we're going to raise money for Curzio Research through a security token, hey, it's great for us. We're raising money. Now we can use that money to grow our business. It's also nice paying much lower fees to go public, which is a fortune if you go on exchanges, accounting, regulation, all that stuff. It's crazy. But the kicker to this industry is, and someone who's studied trends and goes to the Consumer Electronics Show for the last, 8-9 years, always been ahead of trends because I have great contacts. The kicker here is early investors. These are the people that believe in your brand, that invested even in our company, a CEO token, enough to invest in it, right? At the very, very early stages. But they're going to be able to trade this token just 1 year later. And it's awesome considering the liquidity period, when you look at statistics for most private companies that people invest in, is 7 to 10 years. What does that mean? What's a liquidity period? It means a time for you to cash out. Meaning the way you cash out or through an IPO getting acquired, and for a private company that takes 7 to 10 years. That's a long time. As you know, most private companies, they never make it to that IPO stage or even get acquired. A lot of these businesses fail. So what does that mean? You're investing in a private company. You have your money locked up for 7 years. You can't do anything. And say if you see management really, I'm going to curse here, fucking up in year 2 or 3, you're stuck. You're probably going to lose your entire investment. You're in it. There's no way for you to get out. But being able to trade 1 year later is huge. Because say if I mess up with my business, or you see declining trends, which, we're reporting every year, and we're going to have every 6 months pretty soon, that we're going to be reporting. Going to go into that later because we have a big annual meeting coming up that anyone can attend, learn more about our company's CEO token, our first ever. Very, very exciting. Go over that later. Podcast. But, being able to trade 1 year later, it's such a huge point. And this system allows investors to buy into companies, and I mentioned earlier, at the super early stages of growth. Because if you see what's happening today, companies do what? Seed round, Series A, B, C, D, whatever. And every round that these investors invest in, they get to invest at a huge discount in the next round, which is huge. What does that mean? It means when this company eventually goes public, they're blowing out of it, especially most of their position. They're going to remain long-term holders. No, they want that money to do the same thing, and they want to keep rolling over. That's how they make money. But they do 6 rounds of financing. And then they IPO, and they dump this to retail investors during the IPO when it's a multi-billion-dollar valuation. That's what they do. That's what the retail investor, just like SPACs. Without the retail investor, SPACs are shit. That's why you've seen them go to shit, because now they're not going from 10 to 15 without even having a business model or looking at a company to purchase. Now they're going to 10, 9, and 8. And the companies that they're purchasing, now they have to disclose the warrants and the pipe deals. These things are like $200-300 million. These holding companies, right, that are looking, that's a SPAC, it's looking for a company to invest in, and you'll notice that they'll buy a company for $1 billion or $2 billion. It's only $300 million. Where they get the rest of the money from? Now they go to individual funds and they do pipe deals. And they say, hey, we'll give this to you at 3. They don't care. They're in at 10 cents. We'll give this to you at 3. We'll give it to you at 4. Here's warrants. You could sell it, and they give away the 4th. This way, as long as a retail investor's buying and getting fucked, everything works with SPACs. But now retail investors are smartening up and saying, wow, we're getting killed on SPACs, and they're not doing it anymore. That's why you see in SPAC. You need the retail investor, right? You need that sucker at the end. This way, all this stuff works and everybody else gets rich. It's the way it is. I'm telling you how it is. I'm trying to help you. I mean, Coinbase is a great example of this. I love it now. I think it's cheap, but it came out what? At 3 something, went to 425, and where is it, 220 today? I mean, there's a holding our newsletter. We recommended it. We're down like 5% on it. Recommend a lot lower. I think people don't realize that that company is going to do fantastic even when Bitcoin comes down, because the volatility is, you're looking at the volume and the trading volume. A lot of this going through Coinbase is massive. Even on downturns is massive, and that's how they make their fees. They're going to blow out the quarter neck coming whatever, it's a month away, 2 months away. But Coinbase is not the only example. I give hundreds of examples of this system of how it works. The private investors get in, they invest in the seed rounds, they get discounts for every round that they want to invest in after that. They go IPO, they blow out of this stuff because you're buying shares that people are selling, and it's the insiders that are selling. And they make a fortune on these IPOs. And some of these companies work out great. Facebook, a lot of them that came out public work great. Snowflake didn't really work out too great, though. It worked out great for the insiders. Not yet. People think it's going to go a lot higher. Still very expensive. Anyway, my point is this. Security tokens provide something that I haven't seen in Wall Street or in investment banking industry, where they provide massive benefits to both the issuer and the investors. And when you have a better solution that benefits everyone involved, if you want to disrupt a market, find something that's easier, that brings companies and their customers closer together, something that's cheaper, and it'll get widely adopted and scale almost immediately. That's how you disrupt markets. And I saw this as a disruption because it's great for everybody involved. Security tokens, not utility tokens. I mean, Uber's a great example of how this works. Hey, Uber's great for the company. It's generating tons of money. Not huge expenses. People are using their own cars, which is really cool. So you don't have to worry about that. It's great for their customers. Customers enjoy it. Safer experience. I mean, I grew up in New York. Definitely safer. Taking a taxi. Lower price. Nicer cars. Cool people. Could rate them. More interactive. It's great for everyone involved. If you look at Uber, it's a $100 billion company. Right? That's how it works. But retail investors were only able to get in when it IPO'd at what was it, $85 billion, $90 billion valuation? I mean, it's 50-something. I think it IPO'd at like 45, I think. And this was what, 2019? But you're looking at investors buying Uber, you couldn't participate in that early stage growth at all. At all. And maybe Uber goes to a $200 billion valuation. That's fine. But imagine being able to see this and invest early, which retail investors don't have access to, which sucks. It's the big money. But security tokens changes this, checks off all the boxes. It's an amazing solution that I knew would eventually take off like a wildfire. Now, Curzio Research, we became one of the first security tokens in the world where we did a Reg D offering, which is for accredited investors. And then 1 year, our CEO token was free trading to retail investors, where any retail investor could buy it. But surprisingly, to get this kind of access for retail investors, I had to list our CEO token on the Merge exchange. Merge, MERJ, is an awesome company. It's based in the Seychelles, so it's overseas. And it's an actual exchange. You have to understand, it's an actual exchange, not an alternative trading platform, an ATS they're called, which is what T0 is and Open Finance was. A lot of companies that are coming out trading these things are alternative trading platforms on an exchange. So they have the same rules, Merge does, as the New York Stock Exchange and any other global exchange. So we went through a tough regulatory process to get listed there. But it's overseas, right? The problem is we're a U.S.-based company, and it would be nice to trade it in the U.S., but there's no alternative trading system in the U.S. to trade security tokens other than T0, which had 3 tokens on their site, but they haven't added another security token in 18 months, and now it's looking to sell itself. But there's really nothing out there. And it's tough. And there's nothing out there because a lot of money needs to be put into this system, and the SEC is not really regulating or saying what they're going to do, and no one wants to go out there and spend $20, $30 million or raise money where the SEC could be like, you know what, we're not really going to allow this. They allow utility tokens because they're deemed not to be securities, but how is Doge not a security? How is anything outside maybe Bitcoin and Ethereum not a security? Or maybe Litecoin and a few others. They're all securities. They're all securities. They check off every definition of securities. If they're labeled securities, they have to report. They have to report everything. All these things are gone. All these things are gone. And you know what? Now that people are getting destroyed in Dogecoin, $70 billion in value lost. Mark Cuban promoting another token. We'll talk about that later with Daniel. Went to zero, got crushed. And now you see people getting crushed on things that they really can't get any information. It's funny, Cuban, loved Dogecoin and promoting it, and then promoted, this Titan token, it was called. Iron Finance was the name. Then the Titan token, and then it went to zero, and then he's like, oh, we need more regulation. But now you're going to see it. When everyone's making money, everyone's cool. It's fine. It's fine. Everything's all right. Don't worry about it. But now you're going to see SEC come down in this industry. It's going to open up the door to security tokens because this makes sense. And now something very, very interesting happened this week. It's major, major news in this industry. So Morgan Stanley and other venture firms invested $47 million in Securitize. That's one of our partners who basically created our token. Still use it, their platform. Great guys. And this is the first investment by Morgan Stanley into blockchain. And he chose Securitize. Now, Securitize is set to launch their alternative trading platform within 2 months or so, around 2 months. I think they have everything in place, just waiting. It's always a tough process when, regulatory process, but I think they're going to do it within 2 months. But this platform is going to start, and it has to start as an institutional trading platform. So if I listed my token on that platform, only my institutional investors or the guys who came in the Reg D would be able to trade it, not to retail investors, which defeats the purpose of this industry. It really does. And if you look at Reg A has come so far. We've got companies, one of the companies, Security Token, has just raised $70 million. But I could tell you something I was going to tell you in the Security Token industry. If you do a Reg A offering, which is available to retail investors, they can invest in private companies, and you do it through a Security Token, you can't trade that Security Token anywhere. And when you do a Reg A, it's supposed to go free trading almost immediately. But there's no exchanges here that allow retail investors yet, which is insane. But now you're looking at Securitize. They're launching this trading platform. Again, it's going to start an institutional trading platform, only available to credit investors. Then Securitize plans on launching a retail platform, which would probably happen about 12 months from now, which could really jumpstart this incredible industry. Because now you're going to see it, all these security tokens trading on a regulated alternative trading platform. And that's when you're going to see the volume. That's when you're going to see something like Coinbase. That's when you're going to see all these things. But investors are going to get more clarity. They're going to know what they're buying. There's going to be reporting. That's what's great about this industry.